All right, welcome to the daily market recap for Wednesday, October 29th. In today's video, we'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like we do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting off with the NASDAQ, it's a day that ends in Y, which means we had another new all-time high. Little pickup in volume. We had the FOMC meeting today. Honestly, nothing shocking come out of that. Interest rates were dropped as expected. We talked about a little bit of pressure on the job market. That was expected. A little bit of pressure on inflation, expected. So the market really didn't do anything out of the ordinary with all that information because it was all expected. But NASDAQ, another new all-time high, pickup in volume, potentially a hanging man candle here. If we get a gap down and we take out today's low, mega cap earnings, we'll touch base on a second. Kind of mixed action, so I don't really see that happening, but that would still be healthy overall. Some kind of unwind on the mega caps, have that money flow into the rest of the market would be healthy in my eyes. What we don't want to see is that money just leave the mega caps and leave the market altogether. S&P 500, a new all-time high and closing high, a little bit more weak compared to the NASDAQ, again, because money is just piling into NVIDIA and the more heavy tech names, and that makes up more of the NASDAQ than the S&P 500. But still, nice gap up out of that 10-10 range and then off to the races. IWO, the growth stocks of the Russell 2000, a little bit of weakness and a lot of volatility today. Closed below the 5-day moving average, undercut the 10-day and bounced at that support gap area. Don't want to see a close under the 20-day and under the support gap. Otherwise, this would look like a lower high, and then maybe we need to pull back into like the 50-day moving average. ARKK, I really like what this did today. Little shake out of the 5 and the 10-day moving average, nearly the support gap low, bounced, closed above all of those. Nice tight price action here. Through those highs, that's viable for a trade. And then even if we kind of pull back into this range a little bit more, as long as we close above that 20-day and that support gap area, the uptrend is still on. And to me, it's a risk-on environment. Switching over so we can take a look at Bitcoin and Ethereum. Bitcoin, we have another kind of pullback into the 200-day moving average, which is now kind of like the third test of that area. You don't really want to test a moving average or a key spot multiple times. The more times you test it, the more likely you are to break, and the more significant it is if it does break down. So hopefully we do like have a clean bounce from that 200-day and can get through the 50-day. But you've got your line in the sand, like the 200-day, the 50-day. If we break to the upside, we're going to be going through the 50-day. If we break through the downside, that 200-day is going to be our kind of alert for that. And then Ethereum, more weakness as well. Rejection off the 50-day moving average, right back to lows. Really just doesn't seem like crypto wants to get going here. Getting into the leaders, awesome day for the market leaders. And it really shows how market breadth is starting to deteriorate. All the money is just piling into a couple names, which if you're a stock picker, like your job is to be in the couple names that are working. If you're not, you get stopped out. You should honor your stops. That's a good thing if you get stopped out of a name because um, that's just how you manage risk in real time in the market. But as the indexes continue forward, as breadth shrinks in the market, you're going to see some pretty crazy moves from whatever stocks are left over. BE up 18% today, new all-time high. SNDK up 16.5%, new all-time high. Palantir up 5%, new all-time high. VRT up 4.5%, new all-time high. NVIDIA up another 3%, new all-time high. A little bit weaker close there, but I don't think there's anything wrong there. Google up 2.8%, new all-time high. AMD up 2.5%, new all-time high. MU up 2.2%, new all-time high. And then we have the laggard of the group, Tesla, which was still up today, just showing you how strong some of the leaders are. Not quite a new all-time high, but up 0.2%. Getting into the industry ETFs, we'll sort this by price percent change and go through a couple here. The nuclear and uranium themes still really strong. Higher highs, higher lows, a nice pickup in volume. First test of that 20-day after new highs, right around that area is usually a good risk reward spot. I love the undercut and reclaim of the support gap on October 27th, followed by a gap up. That's a really powerful combination to reignite the uptrend. So my guess is those two groups will continue forward. Semiconductors, new all-time high today, up 1.6%. Little doji candle on a pickup in volume. So maybe that does kind of mark an intermediate top. But you're only going to know that in hindsight. Like we're still very possible that we get a gap up and just kind of continue the rally. But if we take out the gap from today and the 5-day moving average, that might be a sign that momentum is waning a bit. This XLE ETF energy is one that's catching my eye because it's starting to build some actual higher lows here. It's a very messy chart, but some of the individual stocks within the theme are already breaking out into new highs. So I did a video last week about how to spot emerging themes in the market, not extended themes. This is a theme that, in my mind, we could see some rotation from those mega cap tech stocks into the rest of the market. And XLE just putting in higher lows, another higher low, popped over the 200-day. Can we get another higher low, this time above the 200-day? And then stocks like PARR, which is leading the group right now, can really get going to the upside. Solar stocks made a new high today, even with ENPH down 15% on earnings. So that just shows you how kind of irrelevant that company is. I still think at some point when ENPH does get back into an uptrend, trading solar stocks individually will be a lot easier because right now it's been going higher, but in a very choppy, difficult manner to get positioned in. KWEB, Trump is meeting with China later today, so that should be interesting. I think because we never took out October 10th's low, we continued to build higher lows while all the trade war tweets came out. I think that's a good sign overall that Chinese equities are ready to explode. We just broke out of a 3.5-year base, pulled back to that breakout point, and we're now resolving higher. A lot of liquid stocks in China, PDD, BABA acting well. What's PONY, another name to watch. But overall, I think the end of this year and next year is really going to be China dominated. Gold miners still kind of having some weakness at the resistance gap, closed back under the 50-day moving average. This feels like it needs a whole new base at this point. Robotics actually holding up really well, just chopping above the 5-day EMA. And then we get to some of the more concerning well, one more that's doing okay is biotech. Another low volume chop day over the 5-day moving average. Just beautiful action here, even while healthcare was down today. I know they're not like one-to-one correlated, but there is some type of overlap there. But biotech, beautiful uptrend here. Pullbacks to the 10-day getting supported, chopping over the 5-day EMA on any volatility. Really good action. Now to a little bit more of the weakness. We did have healthcare gap down, lose the 10-day EMA. First test of the 20-day after making new highs in the rally. Usually a good spot right around that support gap as well. IGV software ETF with a gap down, first test of the 20-day. This could be just another higher low, like we got supported under the 50-day, then supported at the 50, maybe now supported at the 20. Again, my thinking is if mega cap or if money rotates out of mega cap that is extended already, we could see that rotate into the rest of the growth stocks in the market, which would be IGV. We don't want to close below today's low. That would be a sign that we're seeing more and more groups going risk off. PEJ Entertainment ETF hammered off the 50-day moving average. Royal Caribbean reported had a poor reaction to earnings, two moves down. Another sign that the average American consumer is just getting really squeezed. XLF, this is the most concerning group to me, the financials. We had that big distribution day on October 10th, rallied back up, rejected at a resistance gap, actually took out October 10th's low. No other group did that. So some major weakness in financials in regional banks. Rallied up to the 50-day. I was getting hopeful that was like we could build some higher lows and then get through that area. That was not the case. We rejected off the 50. And the thing that you don't want to see is a rejection off a key level followed by an unfilled gap down. And that's exactly what we got. Large unfilled gap down and then closed I mean, right at October 10th low, actually a little bit below October 10th low. So if we lose financials, it's going to be pretty tough for the rest of the market to continue, even like with uh, like QQQ and mega cap tech holding everything up. The rest of the market is really starting to feel some pressure. XLB gap down, lost the 200-day on volume. That's the basic materials, not good. Cybersecurity gap down, lost the 5, the 10, the 20-day EMA, even though some of their stocks like CrowdStrike, which is the leader in the group, holding up fine. Cloudflare NET reports tomorrow, so we'll get some more information there. And then back to, again, the average consumer, you have your retail ETF, big gap down after rejecting off the 50-day moving average, large volume on that sell-off. XLP, the consumer staples, we're in stage 4 at this point. You got your stage 2 uptrend, stage 3 top, stage 4 downtrend, big volume on today's sell-off. And then home builders, which should have benefited from the rate cut, did not. Big weakness today, down another 2.9% on a pickup in volume, closing right near that 200-day moving average. Hopefully, we can get a higher low on that 200-day and start to build out over here because, again, the 200-day, like it was sloping down while we had this nice move up. So some volatility as we build out is expected, but you don't really want to take out the 200-day again with the market at all-time highs. Before we get into the long and the short setups, again, it's just like right in the middle of earnings season. So make sure that you know when the stocks you own report. Eli Lilly tomorrow, Merrick tomorrow. What else tomorrow morning? Roblox will be interesting, AAP. And then after the close, that's the major one. Amazon, Apple, Coinbase, Reddit, WDC, MicroStrategy, Rocket Company, excuse me, Riot, Net, and Roku. And I did want to go over the earnings. So after the close, we had some mega cap earnings. Google was up 6.5%, now up in 6.5% already after new highs. So huge, huge beat by Google. And then NOW up 3.6%, not super important to me. Um, Melly down another 3%, Microsoft down 4%, Meta down 7%. That's trading right at the support gap level here. So hopefully we could see that getting saved. But Meta was already having problems. We barely made new highs after their earnings, and then rallied back up, rejected at the resistance gap again here. So that company was already kind of having earnings. Carvana down 9%. This is the first earnings that they're gapping down on. So that's significant. Chipotle, going back to the average consumer, just getting destroyed in America right now, down 16.5% after hours. And then SFM, the Sprouts grocery store, down 24%. Had that stage 2 uptrend, stage 3 top, and has been in a stage 4 downtrend for a while now. And in stage 4 downtrends, you get drastic moves to the downside. That's why you should never buy a stock under the 200-day moving average, especially under a declining 200-day moving average. Really no need to do that. Um, so really ugly action there. And then sticking with the stage 4 downtrend, one of the shorts that we've covered for a while now is the MMYT in that stage 4 downtrend, down another 4.3% today. All right, long setups. We'll sort this by dollar volume. So most liquid to least liquid. First one is Rocket Lab, not Rocket Corporation. This one, nice bounce off the 20-day EMA, getting nice and tight with the 5 and the 10-day. We do have the support gap, just slightly lower. But even like that's one spot that you could take if we get some weakness in the morning, a little shakeout of that area. Then your stop's the 20-day EMA. But for me, I'll just be looking at through the pivot, the over the last 2 days highs. So not including today's wick, but just through the last 2 days highs, right around 66.50 as a potential entry. That stop would be the low of the day. ARM, another semiconductor, really big base here, has this resistance gap where we have evidence that sellers are stepping in, so we don't want to buy it on strength. We've covered that. We want to buy it on a shakeout. Little pullback into the support gap at 166.80. Then you can get your stop under the 20-day EMA on that one. SOUN, I love the action today. Little undercut and reclaim of the support gap low. Closed pretty well, while a lot of the like smaller cap stocks actually suffered today. Back through today's high, and the 10-day EMA would be the buy spot. Stop would be tomorrow's low. NXE, the solar stocks continue to chop higher. This is an IPO that has made new highs before any other stock in that theme. Big gap up on earnings, up 8.7%. Nice action today, up another 5.8. Just looking for a pullback into the 5-day EMA and the high volume close from earnings, right around 98.50 as the entry. Then the stop would be at Monday's low. PL, beautiful, beautiful move after this high volume earnings, 47%. Also had a high volume earnings before, so back to back, really awesome action out of PL. Had a secondary that got soaked up, pulled back into the HBC, and then about an 80% move over the 5-day EMA. Very, very clean action. Since then, we've pulled back to the support gap under the 20-day, bounced, now potentially putting in another higher low. Through today's high would be the buy spot, stop at today's low. AAOI, this is one that I've had my radar on. I've tried it once, got stopped out, and because the 200-day is still flat here, it's a theme or it's a stock that I want to take on weakness, not on strength. Looking at a breakout retest of the 10-day EMA and the gap zone at $34. And then for a stop, just 3 to 4% on that one. I'm going to hold off on all of the metal and mining stocks because those are all kind of the same theme. AMPX, another name that really nice move off the lows from what, $2 or so? Yeah, $1.64 up to $16. Pulling back here, holding the support gap. Little undercut and reclaim of that area at 1165 would be buyable, and then stop would be the low of the day. Really, really tight stop there. You could take it through the highs. I am not going to. I would rather take it on an undercut so I can keep my risk very tight. NUAI, it's definitely like a speculative name, but it's the best looking chart in my eyes. Huge volume accumulation on the upside. And then as we pull back, volume absolutely disappears on this name. Then you get a huge volume push up, 83%. Volume disappears for 2 days. Volume push up, volume disappears for 2 days. And that pattern has continued. So until that pattern stops, that's a setup to trade. Love the low volume closes over the 5-day EMA. Really, really like the risk reward on this. Just looking for a breakthrough today's high as the entry. Stop would be tomorrow's low on that. OUST, another kind of risk on name. This does have earnings on the 4th. So if that's too close for you, perfectly fine. Just move on. But one of the kind of growth speculative names, I shouldn't use the word speculative. It's more like high ADR growth names that didn't have a major pullback after 1010. Like we had a quick pullback to the 50-day, but it wasn't like the extended names like Rigetti, Oklo, stuff like that. This just continues to build higher lows, higher lows, higher lows. Looking for an undercut of the support gap. And today's gap up right around $33. Reclaim of that area would be the buy spot, and then the stop would be the 20-day EMA. Then NVST, another name that has made a really nice move off the lows from $1 up to about $7. Nice orderly pullback, bounce, pull back into the 20-day EMA again, and then 2 tight days on low volume right at that area. Just to break through today's high is buyable, and then I would get my stop under the support gap low. Back to the metals. So we have LAC, METC, and then are those the only ones I put on this list? Yeah, I think so. So a lot of these precious metals that had kind of, I don't want to call parabolic moves. UAMY was a parabolic top, but the others, I would just say like really powerful moves to the upside. They've had about 50% declines. We're starting to see a little bit of churning on low volume as sellers are just washed out at this point. Today on LAC, undercut and reclaim the support gap again. So through that area, like weakness and then reclaim, that would be buyable, or through today's high, also buyable. Either way, stop would be under the support gap low. This would just be for a mean reversion trade, like a bounce back into the 20, around $7 or so. That's all I need from from that setup. And then same with METC. This one went from $58 down to 27. Really steep decline there. Undercut and reclaimed yesterday's low. Actually closed relatively well, up 2.8% today. So just looking for a little gap down and then a red to green move as the entry. Stop would be tomorrow's low. Then on the short side, we got IONQ, which I'm not convinced this is. I don't think this is like an A plus short. Is kind of what I'm getting at. We had big distribution down to the 50-day, and then we had after a close under the 50-day, we had an unfilled gap up, and that also I should draw that aligns perfectly with the highest volume day for IONQ. So we come back into that area, close under the 50-day, gap up, rally into the 20-day. And then I got short this yesterday at the 20-day EMA. Really nice sell off yesterday. But then again, ugly close followed by a gap up, reclaim the 50, reclaim the 5, rejected at the 10. I think little uppercut and failure would be the entry at today's high, and then you could keep your stop at the 20-day EMA. But if this gets like if we do see money rotate out of big tech and go back into like risk on names right away, I think this probably does have like another kind of bounce higher, maybe into the $70 range or so before it rolls over. So you don't want to basically honor your stops, play it on like an uppercut and failure. You could also wait for the loss of the daily VWAP after that uppercut and failure to be a little bit more sure of or get a little bit more evidence that sellers are stepping in. But I don't want to short into weakness because every time we get into that 50-day, buyers are stepping in at this point. So I want to keep my risk nice and tight if I'm going to be adding to the short. Other quantum name, QUBT, much weaker out of the two or out of like the entire group. This one still closed under the 5-day EMA. Lower volume today, only was up 4%, while IONQ was up, what was it, 7? Yeah, 7%. So significantly weaker within that group. I would rather short the weaker of the two names. Unfortunately, most of my trading is done in a retirement account, and there's no inverse ETF for QUBT. Otherwise, that would be the one that I would really be hitting. We did bounce at the support gap, so a little bit of a rally back up into the 10-day EMA would be the spot that I would be looking at shorting. But again, wait for the uppercut of that area and then the loss of the daily VWAP to get in. So there's evidence that sellers are stepping back into the name. BMNR, we had weakness out of the crypto space. This continues to just get rejected at the resistance gap and then at a lower one, then at another lower one. Not one that I want to short on weakness, something that I want to short on a little bounce back. You got the gap zone, you got the 5, the 10, the 20-day moving averages, all right around the same price. So a little rally back up into 52. Then we could keep our stop at yesterday's high as the risk spot. Costco, kind of mentioned this earlier as a potential stage 4. You got your big stage 2 uptrend, your stage 3 top, multiple failures at that 200-day moving average, a rejection at a resistance gap, followed by big distribution day, another lower high at the 50. And then today we finally closed out the last support gap within that stage 3 top. So things should be getting pretty linear at this point for Costco on the way down. If we do get one more little rally back up into today's gap, into the 5-day EMA, right at 924, that would be the spot that I would be able to size up a little bit more and then keep your stop at the 20-day EMA. Otherwise, just through today's low, it's chasing it down after 4 days. I would still wait for the gap like fill here, but I think Costco is done for here. And then SMR, the weaker of the nuclear names. The theme still is pretty strong, so this wouldn't be like the first one that I would go to. But we do have two uppercut and failures at that resistance gap. It's the weakest of the group, barely made new highs, while Oklo, LEU, those other themes really had some powerful moves. And then had its highest volume ever, and then immediately reversed right back into the base, lower high bounce in that resistance gap area. Another one, little rally into that area. Then you lose the daily VWAP. That would be the entry stop at today's high. So that's going to be the daily market recap for Wednesday, October 29th. I hope you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you could sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in tomorrow's video.